Welcome back to another episode of Projecting Grandeur. I'm your host, Ron Dichter. Thanks for tuning in. Thanks for being part of our growing community. I really like sharing, whatever insight I have, and I hope it's been helpful for those of you that are tuning in. Today, I want to talk about as your company grows and as you start to have some success, what happens when you start getting calls from different groups, whether it be private equity firms, family offices, individual investors that want to learn more about your business. And it usually starts fairly benign, like, hey, I saw you had some accolade or success, and I've been following your business for a while, and just wanted to let you know I'm really impressed, and I'm going to be in the area. Can we sit down for lunch? So I've been fortunate enough that I've had 4 companies that have had that happen, where we've hit some inflection point in the business and we've captured the attention of different groups, and obviously a lot of private equity businesses that come calling. And usually it happens after some sort of accolade, like an Inc. 500 or a top business in your area, and then there's obviously press that goes out about that, and then next thing you know, you're starting to get emails, phone calls, LinkedIn messages from different organizations, that says something to the extent of, I'm really impressed with your business. I've been following it for a while, and I'm going to be in your area, and I'd like to sit down for lunch or coffee. I know you're probably not looking to raise capital, but just want to introduce ourselves. Something like that. And you should be happy and proud and really flattered when that happens. And if you have run your business for a little bit of time and you've obviously been in the grind and you know how hard it is, there might even be moments where you say, I need to take this call. I need to take this conversation and see what this could look like. And don't get me wrong, like I've been involved in many different private equity backed businesses, most of which that I started and ultimately ended up selling to either private equity directly or through a strategic business that is backed by private equity, and I've stayed on and run those businesses, and I've had tremendous personal growth, as well as built some phenomenal relationships that I still hold today. So don't get me wrong, this is not intended to say private equity and family office money is bad. That's by no means what I want to talk about today. But what I do want to talk about is, how do you know when it's time for you to consider that? And how do you know when you should or shouldn't take a meeting? Because it is very time consuming to have these conversations. If you end up talking to a private equity organization or a family office or growth capital, whatever stage you're at in the business, like at some point they're going to say something to you that is going to sound very compelling and appealing. And if you've never had a liquidity event and you've been working your butt off for 3, 5, 7, 10 plus years, the thought of taking cash out and chips off the table and being able to still hold some risk in the business, but actually, taking some of that risk away by putting cash in your pocket, it can be a very attractive offer. And frankly, it may be even the right offer for you at the stage of your business. But what I want to talk about today is really 2 parts of this. Number 1 is, when should you entertain these meetings? Because they do take time and they will distract you from the business. And how do you know when it's time for you to sell or take chips off the table? And I can only give you my perspective, right? So this is not telling you, the way you should or shouldn't do it. This is just me, who's done it now 4 times, and I have now my 5th startup that I've already attracted the attention of private equity, giving you my perspective on it. So first and foremost, if you've never had a liquidity event and you don't have a lot of capital in your bank and a lot of your net worth is tied up into a business, I understand. I have been there before. And, that is probably, that moment when you're most likely thinking that maybe I want to consider, doing something or taking chips off the table, to protect your and your family's, long-term future. And I totally understand that. But what I would ask you, if you're thinking about that, is number 1 is, do you have a strong belief and conviction in the business? And do you, believe that you have the right team and the right amount of resources and the right, product, service, whatever it is you're offering, to continue on the growth that you're currently doing or even accelerating. So ask yourself that. Second is, what are your goals? Is your goal to continue to grow the business, or is your goal to maintain a certain level, to be able to throw off a certain amount of cash that you can take out as dividends? Do you have partners? Do you have partners that you like working with? Do you have partners that if you didn't have them on the cap table, that it might be a more enjoyable experience? Like, all of these things need to play into where you are at in your business. But as a 4-time founder who has exited, I can tell you with absolute certainty from my perspective that after the first liquidity event, the second and the third and the fourth and eventually the fifth become far different in what my motivation is to do a deal. And I think that you just need to, I guess, have perspective on that, because if the whole goal is to take chips off the table because you want to defer some of your risk and you want to put some cash out of the business and into your pocket, selling equity is not the only way to make that happen. There's a lot of different ways that you can take money out of the business without actually having to dilute or sell your part of the business. And if I look back, and hindsight's a very dangerous thing, but if I look back to my very first, actually my second exit, which was my first meaningful exit, which was an 8-figure exit, and I look back to my first 8-figure exit, at that moment in time, it seemed like an amazing opportunity. I was young, I was in my early mid-20s, and I had this amazing opportunity to take a lot of money, at that time off the table, and it seemed like the right thing to do. However, hindsight, if I had not done that and I had just kept the business and kept running the business, and ultimately took out distributions from that business, I would actually have had more money in return from that business, and I would have still had the asset. And today, that business, granted, this was in the early 2000s. That business is still around today. So I think that you have to understand what your goals are. And I didn't know at the time that there were other vehicles to be able to take cash off the table. I thought the only way that I could get cash out of the business was selling part of the business off to be able to get that cash. Had I known at that point in time that there were other vehicles I could have used to raise cash without actually selling any equity, I probably would have done it. But that's what hindsight's about. You learn. And so this is me giving you my perspective of what I've learned. So the second time that I had, actually the third time that I had a liquidity event, which was another decent exit, like the one I just mentioned, and this was a time when the world had changed. There was lots of things in the world that were changing. There were events happening that were changing the economic landscape, and my business was going great. In fact, we were growing at 80% year over year. And somebody came in and offered a multiple that was, too good to be true at the time, and seemed like the right opportunity. And I ended up taking, that deal when I didn't need the money at that point. I simply did that because now all of a sudden I had fear of economic uncertainty. And again, hindsight, looking back, yes, I put more cash in my pocket, but it didn't necessarily change anything about who I am or what I did in my life. All it did was give me now the opportunity to then leave and go start another startup. Whereas had I have just kept it going, what could that have become? Again, this is not a cautionary tale that you shouldn't take money. That is not at all. I'm just giving you my perspective. So here I am in another startup business, and I'm only, first year of this business. It's going pretty well. I've got lots of things happening that, seem to be headed in the right direction, but by no means is it anywhere close to where I want it to be. However, I've already started to capture attention from private equity organizations that have been reaching out. And I've made the cognizant decision, or conscious decision, I should say, of not entertaining any of these phone calls or emails or LinkedIn messages, and I'm quite simply just ignoring them because I don't want to take the conversation. I don't want to have the call. I don't want to talk about it because I have zero interest in exiting the business. And so as I think about myself 20 years ago, when I was having my first real big opportunity to exit a significant company, had I never entertained those conversations, I would have never known what was possible. But the more important part of it is the amount of time it takes to entertain those conversations. Because the natural sequence is going to be a lunch, a few phone calls, some preliminary information that you ultimately decide to share, then some ballpark figures of what this could look like if you were interested. Next thing you know, you're doing minor diligence with, doing some sort of Q of E, with somebody. And before you know it, you have an LOI in front of you, and all you were doing was exploring what was out there. And when there's not a process happening, meaning, this is what groups want to do, is they want to capture your attention before you actually think about doing some sort of formal process, because they know they'll be able to get you at an earlier point and likely at a lower multiple or valuation. And so I would just urge you, I guess it could be a cautionary tale, but really it's just my advice based on my personal experience, is that if you want to entertain conversations with private equity, family offices, growth capital, venture capital, any of those things, if you are wanting to entertain that conversation broadly. Don't entertain that conversation with only one or two groups, because I think if you get to the point where you truly believe that the only way to take cash out of the business is by selling off the business or selling a portion of the business, if you get to that point, then you're better suited to do a more formal, larger process. I have done many types of deals, both no process at all, minor process, and full process. And while the full process takes significantly more time and resources, you've already made the commitment that you're going to entertain it. Because if you think you're just going to put toe in the water and hope that you can talk to one group and then you're going to make your decision, that's not likely. So my advice here is, know when you really want to take on money. Know that it's doing it for the right reasons. If it's simply just to take cash off the table, I would encourage you to explore other ways to do it if you have a strong conviction about the business and the growth of it. And in the event that you say that's still the best vehicle for me, my recommendation, again from personal experience, is make sure that you do a broad enough process to be able to do this one time, as opposed to having death by 1,000 paper cuts doing it multiple times. Again, I'm not here giving you advice on when you should or shouldn't exit, or if you should or shouldn't exit. I'm just simply giving you my story. I've gone through this many times, and now that my new business, Sixpack, has started to gain the attention of different organizations, it's made me think about my personal experience and reflect back on the times that I did take on money, and was it the right moment in time, and did I do it the right way? So I hope you find that this can be helpful in your business if you're going through this process, and if not, keep on climbing, because there's no greater passion and purpose than when you run a business that you truly love and you see growth doing it, and you don't have anybody else telling you what to do. That's a pretty good experience and feeling to be a part of. So best of success to all of you. Keep projecting your grandeur, and thanks for tuning in. And don't forget, share the show with people who you think might benefit. Have a good day.